So all of you already know that I have purchased something like TCS probably a month back, and I have in fact built more of my position. Hi everyone, welcome to today's video. So on today's video, I'm going to explain about 3 specific sectors that are likely to grow from this point. This is a very important video simply because of the viewpoint that FIIs are re-entering the Indian market. Some of the sectors have already given an uptrun, and now whichever sector FIIs start to reinvest their money, those sectors are likely to become rocket. So I'm going to give a breakdown of 3 important sectors as of now, number 1. Number 2, I'm going to discuss my investment thesis in these 3 sectors as to how I am investing in this sector. So let us get the discussion started, and first and foremost, let me explain you the FII data. So if you take a look at current month's data in August 2022, you will see that FIIs have been net buyers. They have approximately purchased 16,000 crores worth of equity, and this is only till 16th of this month. So if we double the figure, the rough investment seems like 30,000 crore. Now, why is this number important? Because it shows a trend reversal when it comes to FII investing. And let me prove it to you by taking you to the overall activity this year by FIIs. So what you will notice is, and look at it from January 2022 onwards, that they had roughly withdrawn 41,000 crore, then 45,000 crore next month, then 43, 40, 54, 58. Then in July, there was a massive slump in terms of the amount of money they were withdrawing from the Indian market. This month, it has turned positive, and it has turned positive quite aggressively because 30,000 crore is not a small number. So to cut the long story short, this is a trend reversal when it comes to FII investing in India. Now, is it going to continue, not going to continue? No one can say for sure, but this is definitely a positive sign that FIIs have started pouring money back in India. And if they do it for another couple of months, the stock market will beat its all-time high. So in that context, let us start discussing the 3 sectors that I am bullish about. So the first key sector that I am bullish about is the manufacturing sector. So let me give you a very quick note as to what I consider as manufacturing. So this, according to me, will be consumer durable industries like Whirlpool or V-Guard. These type of companies are manufacturing a lot of stuff which are consumer durables. On the flip side, you will have core manufacturers. For example, Maruti has started manufacturing a lot of cars this year. So that is a core manufacturer that I am considering. On top of that, I am also considering lenders. Why am I considering lenders? Because when banks lend, especially to small and medium enterprises, what are they doing? They are facilitating the flow of credit. So with the growth of the manufacturing sector, these are the type of themes that are likely to give good returns. On the flip side, I am not considering parties like Reliance or Adani Group stocks simply because of the fact that they do very different type of manufacturings. Their growth is being facilitated by debt. So I am not considering these. So when I say manufacturing, please consider the companies that I earlier spoke about. So with that viewpoint in mind, let me start presenting some data systematically as to why I feel that the manufacturing theme will grow from this point. So the first key reason is the flow of credit in the economy. Now, what is meant by flow of credit? It simply means that if I'm a small business owner or a big business owner, then how much capital am I able to aggregate in order to do product line extensions or building new factories, hiring more workers, etc., etc. So that can be somewhat of a proxy when you consider flow of credit. If the flow of credit is going high in the Indian economy, it's good for the manufacturing sector. Why? Because more workers will be hired, more factories will be created, all good things will happen, and manufacturing sector will grow. On the flip side, if the flow of credit shrinks, that if the flow of money is not growing at a fast rate, then of course these manufacturing units will not be able to get access to capital. Then these companies might not be able to aggregate capital in terms of expanding their capacity and undertaking more manufacturing. So I hope this basic viewpoint is clear, and let me show you data on flow of credit as of now. So this is the story till 2020, and you will see that the flow of credit was okay. Some years it was shrinking, some years it was going up, but net it was moving up. Then came 2020, the flow of credit shrank and it stayed muted, and very recently the flow of credit is back in the Indian economy. This is the latest press release from last month, which speaks about how much the credit is flowing in the Indian economy. So you can clearly see that non-food bank credit registered growth of 13.7%, which is a very good flow of credit growth. You can see that for the agriculture and allied sector, there has been a good growth of 13%. And similarly, you can keep reading all these points and you will clearly see that the flow of credit is back into the economy, which is a very good sign. So this is point 1. Now comes point 2, which has to do with Make in India campaign. So a lot of stress has been given on manufacturing sector. In fact, on several of my videos, I have categorically pointed out that maybe we should focus more on services and less on manufacturing. But guess what? Government's focus is on manufacturing, and a lot of schemes are aligned in terms of helping the manufacturing sector in India grow. So of course, because of government's focus, the manufacturing sector is likely to grow from this. Then comes point number 3, which has to do with the concept of pent-up demand. So pent-up demand simply means that in 2020, 2021, people did not have a lot of discretionary income to go and buy stuff. So as a result, the order book of big manufacturers or even small manufacturers was drying up. If let's say Whirlpool used to manufacture 20,000 washing machines in 2019, then in 2020, 2021, that number might have fell to, let's say 12,000, 15,000. So there was a decrease in the order book. Now that order book is coming up, and you can categorically see this from this chart. And this is a very interesting study, because what you will notice is that, hey, till 2020, everything was okay. Then there was a shrinkage of order book. Pandemic happened, makes sense. Then there was a sudden growth in the order book. Why? Because there was a lot of money that was printed. Then after that, the stock market started shrinking. A lot of capital was pulled out of the economy. So again, there was a period of degrowth here. And now for the last 3 quarters, it has been coming up, which is a very positive sign. And in fact, the growth has been so promising that it is about to breach its previous high. So this is definitely a positive sign. Now, another related data point here would be the inventory to sales ratio. Basically, it means that, for example, if Whirlpool is trying to manufacture 20,000 washing machines, then it's not as if that they might be able to do it in one day time. They need some time. They need to create that inventory, stock it, and then eventually it gets sold. So basically what is happening here through this graph is that there was a lot of inventory that got built up here. Why? Because no one was buying post 2020, and whatever inventory was created, it was being sold during this time. No new inventory was being created. Then this is phase 2, where again a little bit of inventory got built up. Why? Because the inventory was not moving. Now a lot more inventory is moving. Therefore, you see the overall stocking of the inventory going down, which again is a very, very positive sign. Now let me share some more very interesting data points. These are all things that you can go back and check and develop your own investment thesis in the manufacturing sector, but at least I'm trying to present a macro viewpoint here. So if you consider FDI in manufacturing, that how much foreign direct investment is coming just in the manufacturing sector, it is peaking now, and such numbers have not been seen. Again, if you check the capacity utilization, so capacity utilization means that if there are 100 machines in a particular factory, then how many of those machines are being operational, or to what extent the capacity is being used. So instead of 100 machines in 2020, what was the situation? That only 47 machines were being used. Then it increased a little bit. Then in 2021, mid onwards, there was another shrinkage in the economy. So the capacity utilization dried up. Now it is coming back to good levels and very, very healthy levels. Having a 72% capacity utilization is a very strong sign that manufacturing sector is back. Now let me show you 2 final important charts, because this is very important for understanding how you can make money from the manufacturing sector. So there is something called as gross value add. So gross value add simply means that how much value is being added by a unit of manufacturing in the economy. So it's like saying that you can sell one chocolate at 10 rupees and next year you can start selling that chocolate to 15 rupees. So what is the growth? 15 minus 10, 5 upon 10. So that is a 50% growth within a year. And the chocolate is adding more gross value to the economy. So something similar is happening in the manufacturing sector, that if you go a decade ago, then one unit of manufacturing used to add only 14.1 to the GVA. But now it is adding 24.7. So this points to the fact that India is moving towards slightly higher order of manufacturing rather than doing very basic manufacturing, so to say. I'm not saying that we are game changers in artificial intelligence, machine learning and whatnot, but at least the quality of manufacturing might be improving in India, and therefore a lot more gross value add is being generated. This gets reflected in the percentage contribution of manufacturing in terms of exports from India. And through this data, you can categorically see that India's export of manufactured goods, it has increased, which is a very, very healthy sign. And it points categorically to the fact, if you look at inventory, if you look at export, if you look at the total value contributed through manufacturing, this sector is bouncing. Now, what is my investment thesis and how am I using this knowledge to make money? Very simple. Number 1, I am investing in consumer durables. I've already made separate videos on that. Number 2, I'm investing in banking oriented stocks that are going to give loans in terms of expanding the credit. For example, when it comes to small finance bank or credible lenders, I have been investing for the last 6 months. I have made ample videos around it. So consumer durables and sensible lenders are my 2 important plays. On top of that, I'm looking very, very closely into something like Maruti. I think that it is a very good stock which is up for a run up. I'm just figuring out a time when to do it, and whenever I do it, I will let you know. On the flip side, if you're super confused that, you know what, manufacturing sector huge, how will I take positions in it? How will I rotate my portfolio in it? And for that, you can invest via Navi Nifty India Manufacturing Index Fund. So it it's a wonderful fund. It's a very balanced fund, but given the fact that it's a sectoral fund, of course, there are risks associated with it. That if you're not bullish on manufacturing sector, and if you have no faith in the manufacturing sector, don't just simply go and invest. Please research about the sector. And if you don't have the time to do individual research, when to buy, when not to buy, when to sell, if you are struggling with all these things, then going via the index fund route might be a great option. And please check out Navi from that perspective. I will also write my pros and cons associated with this fund. So you can check out the links in the description box. I have added a separate sheet which talks about the pros and cons of this fund as per my understanding. So now let us move on to the second sector which I am bullish about, and this is the information technology sector. So let me give you a very quick breakdown of what I mean by information technology sector, how it is different from tech sector, because we combine both the thing. Tech is a superset, and within tech you will have IT services. So you can't compare something like TCS or Infosys with Google or Amazon or Apple. So please don't compare and confuse these companies by lumping them together in tech. Mostly from a stock market perspective, what you need to understand is that when you are investing in tech companies, they should be investing crazy amount of money in doing R&D, staying ahead of the market, launching new products, having the ability to price their product, etc., etc. So I do not bet a lot of money in tech sector in India. In fact, I don't own any tech company in India as of now. But yes, when it comes to the IT sector in India, there are a lot of positives associated with it, at least for fostering the next layer of growth. So in that respect, let me start sharing some interesting data regarding this industry, and then I will talk about my investment thesis and what stocks am I bullish about. So take a look at this particular chart. A few months back, a lot of people were making the noise that, you know what, TCS is having attrition problem, this problem, that problem. They will not be able to hire people. And now they are hiring in record numbers. So what does this tell you about the industry? It simply tells you that, hey, they are going to hire a ton of workers, put them on a lot of projects and are going to make a lot of money. That is the oversimplistic version here. But the churn in the IT industry or the total employee workforce of the IT industry gives a very good estimate what is going to happen in this industry next. Now, if you take a look at forecasted projection, even NASCOM is saying that the IT industry in India is likely to grow at roughly 15-16%, which is a very, very healthy rate looking at the overall size of the industry. Now, this is roughly the 5-year projection of the IT sector in India, and you can categorically see that it is likely to grow 2.5 to 3x in the next few years itself. Now, the next point is very critical as to why this is happening. That why is it that IT industry did not grow a lot just before pandemic? It was not growing at a crazy pace, but now it is likely to grow. I had been studying this industry for a while now, and now I feel a little bit more confident in terms of investing in certain stocks in this industry. And here is my thesis. So basically, the growth in the IT sector in India will come from two types of customers. So the first type of customers would be Western customers, US, Europe, these type of regions which have Fortune 500 companies which require a lot of work from TCS, Infosys, all these different type of companies. Why? Because TCS, Infosys are the type of companies that can get work done for these big players at a relatively lower cost. They can design a lot of back-end architecture and provide technology solutions to these companies at a relatively low cost. Why? Because the intelligent workforce in India can be hired at relatively inexpensive prices by TCS and Infosys. This is a simple business model. So this engine of growth is slowing down, and this is the problem area for IT industries. That given the fact that, you know what, every country is trying to promote local manufacturing, local things, hire local, do local, etc., etc., it is likely that this part of the equation for IT companies is going to get hit. But on the flip side, a lot of domestic demand is coming. So here is a snippet, take a look at it, and what you will notice is that a lot of big companies are investing money in startups. Those startups are trying to build their back-end infrastructure. These startups are cash rich. It's not as if that these startups do not have back-end manufacturing. For example, one of the key startups in India is called as Licious. It has raised insane amount of money and they are trying to ramp up their technology infrastructure. Which companies do you think are going to help them out? Mostly Indian IT companies. So now take a look at the growth plans of these IT players. These are the type of companies that they are tying up with, or are the growth plans that they are exploring. So what I'm getting net is that when it comes to US, Europe, these regions, the amount of work that a TCS, Infosys is going to get, that is likely to come down over time. That is a risk that these type of stocks present. But the opportunity is that the Indian startup ecosystem is growing. A lot of FDI, FIIs are investing in these startups, and the Indian IT companies are going to benefit from this part of the growth. Now, this conversation will not get completed without talking about the fall in Indian rupees. This is what the chart looks like. To cut the long story short, the INR keeps on falling by roughly 4 to 5% in a year. Is that trend going to stop in the next few years? There is no legitimate reason why that is going to happen. I don't think that INR is going to get strengthened. Why am I saying it? Simply because of the fact that US is witnessing crazy amount of inflation, lot of problems, lot of high debt problems. And even now, if INR is not getting strengthened vis-a-vis dollar, then there is no reason to believe why INR will get strengthened with time. Is this a bad thing, good thing? No, that's an elaborate video itself. I had done a separate video on this. You can go and watch it. But I don't think this problem is going away. Whom does this problem benefit? It benefits Indian exporters. So anyone sitting in India and exporting Indian stuff and collecting dollars for it, they are going to benefit. Why? Because they are earning in dollars. And guess what? IT companies are one of the biggest dollar earners in India, and they are going to benefit continuously with the fall of rupees. So that itself is generating like a 5% growth for them. So now let me finally talk about my investment thesis in it. So all of you already know that I have purchased something like TCS probably a month back, and I have in fact built more of my position. I am not buying small IT players. Why is that? Let me do a very quick analysis of TCS with emphasis. So here I will just show you two data points. So the first data point comes from emphasis, and what you will notice is that, hey, back in like 2018, 2019, the total sales figure for emphasis was roughly 6,000-7,000 crore. And it's not as if that their growth rate has been crazy. For example, if you go back a decade ago, their sales was roughly 5,000 crores. It did not even double by 2021, so which is a relatively slow growth rate. So this is problem one. The problem two is the segmenting of the revenue. What do I mean by that? For example, if you take a look at where emphasis is making its money from, they are primarily dependent on banking and capital market. Now, their other segments are hardly or barely growing. So they are over dependent on one segment or one type of clients. Now, if banking has a crisis or if global banks take away contracts for emphasis, it becomes a problem for them to find new contracts in other industries. So this is a big problem. Now, is TCS suffering from same problem, or are big IT companies suffering from same problem? The answer seems like a no. And let me show you data around it. So first and foremost, let us take a look that, hey, in a decade, how much it has grown, right? So 37 to almost 164. So this is almost like 4 or 5 times growth. If you take a look at product segment growth, almost every single product segment has grown, be it retail and consumer packaging, be it communication, be it banking, finance, insurance. So TCS is getting business in all different industries, but a company like Emphasis is not. So therefore, I'm only betting on blue chip players here. So far, I only have TCS. I'm looking at Infosys. I will let you know if I'm buying or not. Now comes the third and the most interesting yet opaque sector, which is the pharma/healthcare sector. So I'm lumping both pharma and healthcare. These can be considered separate. I'm bullish about pharma and healthcare sector simply because of the viewpoint that in 2020, almost every single pharma and healthcare company gave a rise, but then it corrected quite aggressively. So the valuations of pharma and healthcare right now seems sensible. So this is point one, and this is the reason why if we consider taking some positions in pharma healthcare companies, it might give a good uptrend. So this is point one. Point two, if you consider the growth of the pharma sector, it is almost inevitable. Why? Simply because of the fact that insurance is getting more and more aggregated. Now you'll say that, okay, how does insurance impact pharma? It impacts a lot. Why? Because as and when the healthcare sector gets more and more organized, what will happen? That instead of going to a local Hakim, you would go to a slightly better doctor. The moment you go to a slightly better doctor, what he or she will do? They will make you buy slightly more expensive medicines. So automatically that will lead to the growth of pharma sector. So this organization of healthcare is happening in India, and as a result, pharma sector is also likely to grow. So this is the basic thesis. Now, if you aggregate this with this particular graph, what you will see, the forecasts tell us that we are likely to grow from $42 billion industry to roughly $130 billion industry in the next 10 years. So which is a very, very impressive growth rate looking at the industry perspective. Another good thing that has happened in the India pharma industry is that we have started to export a lot more. For example, you might have seen that during the COVID times, India exported a lot of vaccines also. So what this does is that this reduces the quality deficit perspective about India. People or countries start believing that, you know what, good quality stuff can come out of India. So we start winning more and more contracts with time. So these are the positives. Now let me very quickly explain one of the key negatives associated with Indian pharma industry. Now, growth of pharma depends on how much R&D money is coming into the pharma space. For example, one of the key reasons why Switzerland, such a small country, has a massive pharma industry is because of the R&D money that is available to pharma companies in Switzerland. In India, that is not the situation. The R&D that happens in India is not very impressive. That's it. Second, our legal structures are not at an advanced level for a lot of FDI inflow in pharma. So these are two critical problems that pharma industry is facing. I have taken some positions positions in some pharma stocks as of now. I will reveal it later. I will not reveal it now. But there are a lot of things to consider. For example, consider the case of Divi's Lab. Everyone is bullish about Divi's Lab that, you know what, unorganized to organized play will happen. Divi's is a very good compounder. Yes, it might be. But there are a host of problems that you and I as normal retail investors might not know about. Let me talk about a couple of points. So first and foremost, through this graph, you will see that, hey, that the revenues of Divi's are going up, but the profit margins are coming down. Now, this is illustrated by the EBITDA figure. So that clearly tells us that despite generating a lot of sales, it is not able to maintain its margins or profits. Now, why is that the case? There are numerous reasons for it, but let me highlight one of the key points. Now, basically what happens is, let's say that there is some good, cool drug that some company has made, right? Now, it will find a lot of product market fit. A lot of people will buy it. The company will price it. Now, what will happen with that drug over time? That a lot of generics can come. Second key thing is that the license might expire over time. And third thing is that companies' focus itself can shift to finding the next big thing. So these are the three problems that are happening with Divi's as of now as well. So therefore, it looks like that in the midterm, I'm saying midterm, not long term. So in the midterm, Divi's Lab might not be able to generate a lot of profit because it has to find the next product market fit. Now, there are numerous such considerations that we will have to figure out, but here are some key investment thesis related points that I will explain. So first and foremost, pharma is one of the most difficult sectors to invest your money into. So I am taking broad and diversified bets in pharma industry. Rather than picking a big chunk in one particular stock, I'm diversifying my stake because I don't know which company will come out with best drug for a particular treatment and I'm not qualified enough to speak about that. So this is one. Second key thing, I am staying away from high debt companies. For example, if you look at the healthcare space, especially hospitals, you will find a lot of companies which are in healthcare space. They are taking crores and crores of debt, very high debt to equity ratio, and these companies do not give any return. A classic case in point is Apollo Hospitals. It has hardly given any returns. Why? Because its debt to equity is roughly 72%, which is like crazy amount. And it is not as if that this is a new startup which requires a lot of money. The simple problem with such companies is that they are not able to run operations efficiently to plow back money, whatever they are making, into their company and grow it further. So that organic expansion becomes a challenge for them. So final point regarding the investment thesis in pharma is that whatever companies you are purchasing, stay diversified and take small positions in pharma because this is a highly volatile sector, irrespective of how good a particular company is. This is my realization about this sector. I'm learning more about it. I will keep on sharing more information with you, but I hope you enjoyed this video. Please press the like button if you did, and please share it with your friends, and let's all become rich together. Thank you so much, and I will see you soon.